Good morning, folks. I am Mark Sebastian. This is the founder of OptionPit.com, and this is the Option Pit AM Volatility Report. Just a reminder, so we dropped a couple of events. We should have dropped a couple of events into our event tab, but they will be there as soon as I change the date on those events that I added. We're going to have a free webinar on the 23rd, and our next paid event is going to be Saturday, November 8th. They're both going to be about directional trading. You can go to optionpit.com/events to check those things out. Well, here we are. We are sitting at that 200-day moving average, right around 1903. Every time we touch that 200-day, look for volatility to spike. That's going to be a pretty heavy line in the sand to the market. I think we'll get some dips below it. Now, if we get a surge through it, then that should be considered a sign that it's not going to hold. Now, if you look at the NDX and the fact that it's currently down 60 points, all right, that over 1% again, all right, although that might be a bad print because I'm looking now at the Qs and those aren't down that much. So, all right, forgetting that NDX print, if you look at the Qs and the SPY and the rut and where all the weakness is, and the fact that Dow's now down 60, I'm not sure this stuff holds here for, I mean, you're going to hit some resistance at 1900, but that might be it. I'm not sure that this market's going to hold that well. I think we need potentially one more day of flush out before we're really able to bounce. Now, there is some other resistance levels, all right, besides that 200-day moving average. From an intraday standpoint, all right, there is a resistance level of, I believe the low, we're right here at that 1904 level. You know, there's no real technical resistance till, I mean, I guess probably you might see some resistance around 1888 is where there's some technical resistance. And that's where people would have been buying in at the beginning of this rally. So, not sure I'm super enthused about the market's chances here if people don't step in and buy this 200-day, which right now does not appear to be happening. Vol is spiking. You see what I'm talking about. Every time we cross that 200-day, Vol's going to spike. October's moving. See, the October VIX is now about to break 20 in a really nice move. And, you know, you've just got some real you just have some real potential for the market to take a nosedive here. We're right at that 1900 level. So that's as key as that 1903. Once that breaks, look out. All right. So, you know, do I think we're going to get? My personal feeling is that, you know, I thought we were going to get a big sell-off today, not Friday, and since we've gotten sell-off on Friday, you know, I don't know about today. But if we do get something, it could be real ugly. And there's not a lot of liquidity today because the Columbus Day is closed. All right. Our banks are closed for Columbus Day, so they're probably their trading desks are in, but a lot of the regular banks aren't closed. And there's not a lot of, you know, that's really about it. There's just no, you know, there's not, if there's any conviction, there's no liquidity to stop it. And on top of that, normal premium sellers who typically like to step in and sell stuff when things get cheap, they got spooked at the 100-day moving average. I'm not sure they're going to be willing to step in at the 200-day. So I think volatility is going to be whippier. And that is primarily because all the liquidity is basically market makers right now. So that's another important thing to be aware of. All right, folks, on that note, if you have any questions, you can dial me 888-TRADE-01, or you can email me, mark@optionpit.com. All right, everybody, have a great day, and I will be back shortly.